Andre Cilliers, you are becoming more and more famous as the currency predictions go forward. Last time we spoke 2 weeks ago, we were 12 days into the invasion of Ukraine. It's now continued to get into a situation where markets are being influenced in ways, I suppose, that no one really knows what Putin's next move would be. And you're in the unenviable position of having to advise your clients, TreasuryOne's clients, what to do about a very important thing, their currency exposures. How do you deal with something like this, where no one in the world has a clue what Putin's next move might be, and yet you've got many of your clients who actually have to position themselves in a way that they don't get disadvantaged.
Yes, it's not a very fortunate position at this point in time, but as I've said many times before, the emphasis is not really on trying to predict the currency, but to try and manage the risk that comes along with being in markets, either importing or exporting, and to mitigate some of those risks. And there's various products that you can use. Um, we have advised our exporters some time back, and for quite a long time now, that if you see it around the 1530 and 1540 levels, which we have seen before, to take some forward cover, because it might not be staying at those levels for too long. And you
Just
can
explain
recall
that,
that we've
Andre. Explain that 1530, 1540, because we've surely got people all over the world who are listening to this, not just South Africans. What is that? Presumably, that's the rand dollar exchange rate you're talking about. I mean,
That's
what
the
is
rand
forward
dollar.
cover?
Yeah, that's the rand dollar exchange rate. Um, Now, at those levels, we recommended to our exporters that they should look at covering some of their risks off, especially for the short term, because those rates might not be there for a very long period of time. And you can recall that we've spoken about a currency that traded in a 1520 to 1550 band. And we said several times that if it breaks out of the 1520 to the bottom end, that we could rally into testing the 15 levels against the rand, uh, which is exactly what happened. And now we're at these levels where we're currently trading around the 1485, and in between we had the war and the start of the war, and a currency that behaved very, very strangely, because I think most people expected the rand to take a bit of a beating and weaken substantially at the start of that war. And the question arises as to why that didn't happen, but we can discuss that just now.
Mm.
But for the moment, we've broken out of the 1520 range, which we said if it breaks those levels, we can very easily retreat below the 15 level. And we are currently below the 15 level. So there's no ways that it will break out of. No, I want to rephrase that. Can't say that there's no ways, but it's very unlikely that it will break out of a range of the 1485 to 1520 levels at this stage. It seems to be fairly entrenched in those levels. We are
Yeah,
we
you were
are
just
getting
saying.
closer to technical
Mm.
levels again, where if it breaks lower, then we could even go down as low as 14 and a half.
It's extraordinary stuff because, as you said just a moment ago, when the war began, the immediate view of most people would have been, well, emerging market currencies, we're going to come under pressure. It would be risk off for now. And the rand being one of those currencies would actually have weakened. And as you've just explained, it's gone the other way. So tell us why.
Okay, so if you look at the rand and you're wondering why, then we have also seen a gold price reaching levels of 2070. We've had platinum up at $3,500, $3,600 an ounce. We've had uh, palladium up at the 3,600, platinum around 1,300. Uh, it's since come down quite a bit, but at those levels, South Africa being a commodity country, we definitely got a bit of a right tick in that block. Secondly, uh, if you look at Russia and you look at the South African trade figures with Russia, certain industries in the country, and I'm thinking here about a fruit industry, for instance, might be slightly more exposed But if you look at the overall trade of South Africa with Russia, then our trade with Russia and the Ukraine are relatively small, and they are not our biggest trading counterparts. So, in other words, in terms of sanctions, in terms of a flow of goods between the countries, once again, we could get a little right tick in that block. Geographically, we sit at the southern tip of Africa, which is a bit far removed from what happens in Europe. And if this escalates, and we don't know whether it will escalate, hopefully it will not. But even if it escalates, being at the southern tip of Africa, geographically, we're a little rightic in that block again. Uh, and then, so with all those little right ticks, and in terms of trade, in terms of imports, exports, then also getting a right tick. That's why the rand actually performed better. Our yields are also still relatively high compared to other emerging market countries and the first world countries. So you almost, for a change, can say that we're a slight safe haven at the southern tip of Africa. And
Extraordinary.
hence the rand performed exceptionally well during this period.
It is extraordinary, isn't it? All other logics would have explained, would have suggested it differently. But as you've unpacked for us, there are specific reasons. There's always different reasons to the immediate headline.
Yes. And so we are at the benefit side of what happens and a stronger rand. And if you then look at what I've just mentioned, a war playing out in Europe, and you look at Europe's trade figures with Russia, for instance, Russia being a major trading counterpart of Europe with massive good flows, they massively dependent on oil and gas from Russia's side. And if you then look at the euro and the weakening of the euro and how strongly the rand's performing against the euro, that sort of underlines exactly what I've said in the previous part. Uh, and now we've also, since last week, had an interest rate increase in America. And last night we had the Federal Reserve chairman once again hinting that that 25 basis points might have been very, very conservative. And with a stubborn high inflation, they might very well look at a 50 basis point move at their next meeting, which places the euro further on the back foot and the dollar on the front foot.
Andre, when we then have a look back at where we were 2 weeks ago, and in the past 2 weeks, as you've explained, the rand has firmed, it has got stronger. How then are we to interpret what might happen going forward?
Well, it's very difficult to interpret what goes forward. We are seeing that the oil price is performing badly again, and if I say badly, good for oil and for oil drillers, bad for consumers. Um, so if you look at that, just that there, but I think the reason for that is Europe saying that they might place an embargo on the oil, and there could be a further shortage of oil then because nobody else can import oil out of Russia. But this, going forward, we have to see how close we get to talks between the Ukraine and Russia, because that will definitely impact what goes forward and how things gel out forward. But for the moment, I do not foresee that the rand will suddenly weaken and go above the 15.10, 15.20 level. We will remain within these ranges, and we have to watch the 14.80 level quite closely. If that breaks below, out of that range below 14.80, then we could go into a range of 14.50 to 14.90 for quite a period. So at the moment, the risk for me is to a stronger rand at the moment and not really a weaker rand. That's how I would map out the road forward. Rather look at a stronger currency than a weaker currency at this point in time.
So your clients, are you suggesting that they don't take out cover, forward cover, or insurance against a further, or rather, insurance against a weakening of the rand right now?
Well, I wouldn't take out cover in terms of expecting a massive weakening of the currency. If I was an importer and if I were to advise importers on the short term, with the strong levels of where the currency is trading currently against the dollar rand, against the US dollar and against the euro, I would certainly look at taking some forward cover for my short-term commitments that I have to pay as an importer. As an exporter, if you have not taken out forward cover as yet, and you have absolutely no forward cover, I would look at starting to protect the bottom end. And there's various products that you can use. I would not necessarily take out fixed forward rate forward cover, but I would most probably look at fixing floors so that I'm not further exposed to any further strengthening, especially in the short term.
It's so interesting that the world can change so quickly, and I guess it could if Zelensky and Putin and their teams were to get together, call a truce, end this war. What would the immediate impact of that be on the rand, if any?
Well, I think the immediate impact of that would most probably be slightly negative towards the rand because we could then see that commodities decline in price quite a bit. And that could spell some negativity in the terms of our terms of trade and a commodity boom that is not as strong as everybody then expected or the way it held out in the last 2, 3 weeks, and that might be slightly negative for the currency. But even in the face of that, I would not bet on massive weakening of the currency at this point in time.